I'll get straight to the point. I'm going to use a survey we ran as PwC about how fintechs are impacting the financial services industry. I'm going to focus on banking, and I'm going to talk about how we see fintech reshaping the banking sector. Now, the banking sector obviously has already gone through quite a lot of change, but we think that the change that's going to be brought about by fintech, and by fintech I mean not just the companies themselves that call themselves fintech, but the principles they stand for. So what sits behind that concept? Now, I think the banks will have to transform themselves in order to respond. And transformation takes a lot more than just putting on a pair of jeans and a t-shirt for an accountant to try and fit in with the crowd. So in the same way, the banks will have to do a lot more than just changing their brand, their logo, and perhaps deploying an app for people to access the banking system with. It will actually take quite a lot of true transformation at the core of the bank's operations. Now, the results come out of responses from quite a lot of participants across the globe, many of which from the C-suite. So we see these results as quite representative of the broader industry, and we see them as the thoughts of people that actually participate in strategic decisions, both on behalf of the fintech companies and the banks themselves. Basically, what it tells us is that, at the core of fintech is a customer focus. So the customer focus and the way that customers get the service they want from their banks is where the fintechs like to sort of gain that advantage against the traditional way of banking. You will see that from the graph up there that at the present time, the banks, whilst they have obviously introduced apps for people to use them, still the majority of banks' customers do not use apps to carry out their normal banking business. Now, in 5 years' time, that's going to change entirely. It's going to be the flip side of what you see today. And this is what fintechs have in mind. They're actually looking at the future, and what they do and what they offer is a more sort of customer-centric delivery model, and the products themselves are adapted to the customer needs. So what is it that they currently provide fintechs that banks don't? They provide sort of solutions for customers which cannot benefit from traditional banking services, either because of poor credit quality and therefore they cannot borrow, or because they don't have the typical access to the traditional funding sources. Also, fintechs are quite innovative in the way they combine a number of different services to provide holistic financial solutions. Banks obviously provide deposits and loans, and some of them provide some investment management services and so on, but still these are not holistic solutions in the way that fintechs look to deliver products that touch on all the needs of their customers. Now, I think the banks will have to respond to that, and to respond to that, they have to do that with specific focus on customer experience. I think at the heart of that lies an understanding of what their customers do and need, and to get that understanding, they need data, and they need the systems and the technology to understand and translate that data into solutions. And this is what exactly fintechs do already. So the banks will have to leverage from what fintechs do by introducing their own capability, which is obviously to have the scale and the size of operation, as well as the ability, I guess, to respond to regulation. So banks do have advantage that fintechs don't have. And I think the win-win situation for both is a combination of the good stuff that a traditional bank has and the good stuff that a fintech company has, and bring it together into a proposition that will become more value add to those organizations. Now, that's easier said than done, and in the survey, obviously, we ask a number of sort of, participants, if you're representing a fintech, what are the issues you see in working with a bank, and vice versa. And there were quite a lot of them. I mean, just picking up the main ones is, look, regulation is an issue. They see that both ends. The culture itself is an issue. Now, I mean, banks are obviously in a journey of adapting their culture and responding to, exogenous factors, mainly driven by regulation, but also driven by the need to treat their customers a bit more fairly. I mean, that's a very broad term, but that's one that has actually brought about quite a lot of change in bank cultures lately. And again, that's a change brought about by the recent crisis. That was a necessary change. Now, of course, we're in Cyprus, and we're here to talk about, what fintechs can do to Cyprus banks and what Cypriot banks can do to respond to this. So I will leave you with that thought, and hopefully George will contribute with some ideas of what his own bank is doing, or at least how you see the banking sector in Cyprus responding.
Hello, everyone. I'm George. Just to give you a few points on the bank's perspective on the PwC survey. As Vassilis already mentioned, we are indeed going through a transformation, and fintechs are a part of that pressure for this transformation. So we are indeed going through a transformation, and I think one of the main reasons for this transformation is not so much the fintech pressure, but the need, the demand from the customer to change. And the reason for that is that they are comparing banks, the service that they get from banks, with the service that they get from other industries. So if they're using, for example, Facebook or Amazon, they want to get the same experience from the bank. So it's not so much about comparing a bank with a fintech or another bank, but their day-to-day experience, how they download a video to see and all this stuff. So at the same time, the banks are facing another pressure is that we have existing customers, we have the previous generation, and we have to maintain this dual service delivery model. We can't just abolish the branch. So we're kind of losing focus instead of spending all our resources on the pure digital offering that, of course, a fintech can do. Now we know that this is going to change, as Vassilis said. In a few years, the new generation will be the major source of income, so we know that it's strategic for us to do this change. But another thing is culture. We know that we have a lot of technology, we have apps, we have internet banking, but it's not being used. Cyprus, in a Eurostat survey, has only 25% penetration of internet banking compared to 40%, which is the European average. So there's a lot we can do there as well, as in terms of culture, to push this and educate people to start using technology. Now, if you, as Vassilis already mentioned, there are, of course, strengths, a lot of strengths in the banks, and there are some strengths in the fintechs. And if you put them side to side, you start to see a pattern. There is a kind of a mirror image, one-to-one. What the strength is from a bank side is probably a challenge for a fintech, and vice versa. Just to mention an example, the banks do not have this agility to adapt and focus to develop a digital product, which could be something that a fintech could be very strong at. At the same time, the fintechs don't have the resources that the bank may have. So if you put these things together, maybe instead of viewing fintechs as a challenge or as a threat, we can look at it as an opportunity for collaboration, for co-innovation. Now, to do that, you're probably going to need a couple of things going on. One is, of course, combining the strengths, but another one would be to have an ecosystem where these fintechs can grow. And I think banks can also play a role as also startup incubators and angels. But once we have that ecosystem, then we need to take one step further and explore ways to have a business model that makes sense for both. So the key message I want to just pass is that, yes, indeed, we are going through a transformation, but we are at the same time going through our own transformation. So we have a lot of initiatives. We do a lot of stuff with regards to technology. But at the same time, we see some opportunities for collaboration. And actually, this is a call for entrepreneurs that may have good ideas that they can think of, that banks, especially in Cyprus, can be open to listen to ideas, and we can work with a collaboration model. Thank you. Okay.
Thank you. So we're gonna have now gonna commence the fintech panel, and we're gonna dedicate 10 minutes at the end for questions. So let me introduce you to the other two speakers. Mr. Michaelides was in thesis. He was a director at sales and customer relations, and now you live in Luxembourg, and you're an independent consultant. And Mr. Paulo Bilezikjian, did I pronounce it right? He used to be in charge of microstrategy at a multi-billion-dollar hedge fund, and was on board of mid-sized companies in Brazil and Canada. I've introduced the other two speakers, head of IT in Business Intelligence Bank of Cyprus, and PwC partner, Mr. Vrachimis and Mr. Koushis. So I will start with the first question. Mr. Koushis, you talked about the agility of startups and how the banks may lack this. So my first question to you would be, are the banks too late to market? And if I turn the tables around, do the startups actually need the banks to achieve their scalability through the bank's network? Because we've also seen that about 76% of the banks said they are afraid of being disrupted by startups. And at the same time, 42 of the banks said they want to partner up with a fintech. So again, are banks too late to market? And do fintech startups need the banks at the end of the day?
I think banks are not too late to market. It's just that banks are more focused on proven technologies. So they kind of fall behind on experimentation and trying out new things. So they're waiting to see where the technology is going, and then they go in as fast as possible. And they are also trying to be faster in that respect. But when it comes to really the cutting edge technology and the latest thing, yes, you could say that we are a bit slow to market. And the second part of your question, definitely, I think fintechs would need banks because they could provide all the strengths that the fintechs are missing, especially the customer base, an established framework where they can put their technology into good use, and for, of course, a mutual benefit.
Any of our speakers would like to add to that? There you go.
Thank you. I would agree that the banks are not really too late to the market. I think there's still a lot of uphill to go for the market to mature. And I do think that there is a lot of space for collaboration. But just to add to that last point, I think the one piece that generally fintechs lack, and we've seen it time and again, distribution is one element. So the sheer size and customer base of established banks is not something that can be easily replicated by a startup. At the same time, there are basic back office functions that banks have: compliance, regulatory support, all of that expertise in that a startup, a couple of the audience mentioned it over the course of the day, being more techie, being more focused on that niche that they are covering, they never even thought about those elements which are a staple of the bank. And that's where they really like the tax example we heard a little while ago. And there's no reason why they should have that understanding. But that is where there is a lot of fertile space for complementary collaboration between the two.
Thank you. Paulo?
A very quick comment. I think banks perceive fintech as a challenge, but my sense is that they perceive more as a challenge in the sense that other banks might use the technology better than them. So that is the real competition, I think.
That is very interesting because you mentioned other banks may be afraid, and also some of you talked about regulation. And having the chance to look at PwC's report, I realized that fintech startups target specific areas that are underserved by the banks. For example, peer-to-peer lending, which is expected to be a $150 billion market by 2025. Also using their own models to serve to customers with poor credit score, or even develop personal finance management tools. And one of the most popular bots in London right now is developed by Cypriots. It's called Plum. It's Victor Trokoudis and Alex Michaelides. So my question to that would be, how do you see the policy evolving to respond to these changing finance models that fintech startups deploy to serve these underserved areas by the banks? Who would like to go first?
I can start.
There you go. Thank you.
I mean, by policy, I guess, you mean authorities, regulation, and so on. Look, I mean, today, regulators or the supervisors or the authorities that govern what banks do are a lot more proactive. I mean, they used to be reactive. They used to be behind the curve. They used to effectively respond to issues as those issues already manifested themselves into crisis, right? But the regulators now have moved on. I mean, in a number of areas, actually, they have invested in a way that they are able to be ahead of the game, of the banks. And they are intrusive in the way they regulate. So I expect them to pick up on these areas and these new trends that are evolving, and they have been already, in fact. And I expect them to be quick to regulate, and regulate does not mean one specific thing, but it means effectively put the right safeguards in place to ensure that those consumers that use the services don't stand to sort of be disadvantaged, lose out, or fall sort of victims of bad practices, because there is beyond the strict sense of compliance, as I said. Regulators are now looking at the concept of making sure customers are treated fairly, and that they have the right information on which to decide, and that therefore they're making informed decisions as opposed to just following trends or sort of nice things that end up not being so good for them.
Absolutely.
Right?
Any? Yep.
I think you mentioned P2P lending and also people that don't have access to credit and so on and so forth. Well, over time in my career, investment career, the objective has been to look at things and see, what is this, right? Has it been done before? P2P lending actually predates banking. Banking is an evolution of P2P. And if you see, I mean, the survey is up, and this is the issue with technology is that it changes very fast. So P2P is no longer P2P, essentially. It's changed a lot, and actually there's a case study I'll present tomorrow, a very short one, explaining why P2P is very different from what it was in the beginning. So it's an interesting idea, but not necessarily a good idea. It will help banks perhaps originate loans that they could not originate, and things like that. So it has done before. It has been done before. And it brings a number of things to the table, but it's not disruptive in the sense that people now will lend to each other. Limited potential for that, in my opinion.
Especially it's the things that banks don't want anyway.
Exactly. So there is negative bias in the selection process, which is a big problem. And then there's also a problem of customer behavior, because people, they look at the loans, they say, well, maybe I lend it at the highest possible rate. Should you do this? Maybe not. So it's a bit more complicated than it seems, I think. The other thing is this low score lending. It's been done. It's specialty finance, it's called, right? So, these ideas, they look good on paper, they've been implemented, there's been a lot of capital thrown at it, but it's changing very fast. The name P2P is kept, but the reality has changed.
So moving on that, actually, you said that pretty much is something that the banks have already done, which is very interesting. So if it's done before, and now we are seeing that the startups are able to caption, to get momentum and get traction from being more customer-oriented, as the report describes them, 80% more customer-oriented than the banks, as they describe, because they target these underserved areas. But the banks have already been there. Should the banks, is it worth it for the banks to go back to their roots again and target those areas? Is it profitable for them? Is it worth it for them? I don't know, how should I call it? And if they do, what should be their priority in your opinion? Let's start with Paulo and then move to...
Well, this is a very, very good question. I think when it comes to P2P, I think the beauty in so-called P2P is that easy of use. You know, when you apply, you go online and apply for a loan. And it's very simple, you know, input everything and it's there. So it's much more how easy it is to do it rather than who is doing it. So, you know, again, I think the collaboration is the most obvious thing, and it's been happening. You know, the most emblematic P2P companies now are cooperating with banks everywhere because they realize that, you know, there's something, as Michalis mentioned, there's some things missing in this whole picture, and you need a bank. So it's collaboration is probably going to be the majority of this, the fintech activity is going to be through collaboration, in my opinion. The specialty finance, but then it's a bank decision. I think most banks do not do this activity of lending to very low. It's a niche. It's a big niche in some places, but it's a niche that requires a different approach to things. Banks, eventually they can do it if they, some banks have ventured into that in the past with bad experiences. So it's fine, specialty finance companies will do it, and fintech will help it. Because you can have a better scoring, you can have, you know, streamlined process. The customer experience will improve. But it's not, it's an evolution, not a revolution.
Let me add one point here. And I guess you can say that you can take it one example at a time, because there are cases, and I think it's been mentioned, there are cases where you have a fintech that actually spots, you know, a specific gap in the market, and they actually have a successful execution and go at it and actually create a market where there was none before. It was an opportunity that was essentially turned down by the banks previously. And then they have the opportunity also to take that second step and actually enhance that market and turn it into a more bankable product. And I'll give you an example. When Square launched in the US, it targeted an equivalent of Square in Europe, such as iZettle and a couple of others. When they launched, they went after that small business, small merchant that was actually not even interesting to the major acquirers in Europe or in the US. They were unbankable in a way. But by pulling them all together and giving them a solution based on the mobile phone, which they enjoyed, they created a brand new segment by pulling all these millions of merchants together and creating a new market. Their second step, their evolution, was Square Capital, where they now taken that market and taking it into a traditional lending solution, where they're giving all these millions of captive customers now who are using their product, and they're turning them into lending customers, where they give them working capital loans based on the massive data that they have gathered from their usage. They know what they transact, they know how they transact, they know what is their capability, and based on that, they actually can give a very well-informed banking-style decision on the loan that they're going to give them. And that has created a whole new set of segments in fintech and in banking altogether, which there was none before. And only a fintech can actually sniff that out. A bank cannot sniff that out. The bank will eventually buy this product, but I don't think they will create it.
Yeah, I think that was the same point that we were trying to make, that we expect fintechs to sniff that out from the economy, from the behavior of the customer, and if we can find such cases, banks would, I'm sure, would be very interested in listening to fintechs and find ways to collaborate. The local economy could have some peculiarities. For example, in Cyprus we have a lot of Czechs. We have probably ranked first in the European Union. We could make smart contracts. I don't know. The fintechs will just figure out what's needed, and we will listen.
No, just to add, I think you covered it all, but effectively it's not about new products as such. I mean, I think it's less about new products, and I think it's more about how those products are customized for sort of, you know, the customers of the banks and delivered, right? Because I think there is something in the delivery as well. Look, I mean, let's be clear. Banks are not just looking for new business, they're looking for ways to deliver their business cheaper to the banks. Because other factors, again, have made banking expensive for the banks to be delivered. And, you know, the banks have shareholders. They need to return money back to the shareholders. So even if it's just doing the stuff that a bank does today, faster, cheaper, better, that's still a win-win situation for those involved. So.
Absolutely, thank you. And I'm really glad you mentioned the example of Square. I was actually talking to a friend who works for them in San Francisco. It's very interesting how they started as a Kickstarter project, and then they turn into a fintech startup, and then they turn into an institution that lends money and keeps credit scores. So because before we open the floor for questions, I will take you to another side that fintech is mostly working about, if I call it like that, and it's a bit controversial, cryptocurrency. And I'm going to make a reference to two exogenous events that have affected currencies recently. One is the Brexit, and the other one is Donald Trump's win in the US election, which in both occasions, because volatility in the currency was expected, we've seen cryptocurrency stocks soaring and going up. So I would like you to comment, since traditional currencies is very volatile, let's say, to exogenous events such as elections. It always has been. I would like you to comment, what do you think of the future of cryptocurrency and how it could potentially disrupt or not disrupt the future of banks? It's quite broad, I know, but please start.
I think the technology behind cryptocurrency is not excluding the possibility of adopting that technology in the actual currency that we use today, in the physical currency. So I think eventually it will replace the physical currency that we use. Of course, you will always have some parallel economy or parallel currency, but the technology behind it will be regulated eventually, because I think governments will be very careful about losing the control and losing the possibility for taxing or even money laundering. So I think it will be regulated. There might be always a parallel economy behind it, but cryptocurrency will become mainstream.
I agree with that, and I think, you know, again, perhaps this is yet another example of sort of a good idea that ends up sort of replacing the traditional way of how we do things, but effectively it will be adopted into, you know, the more traditional sort of way of transacting, and certainly, look, there has to be substance behind everything, right? In the end, and sort of, as George says, governments, you know, have a way to intervene and sort of, you know, enforce these things. So I think soon enough there is perhaps that opportunity now for certain people to take advantage of that. But in the long run, I think that thing will just, you know, amalgamate into the normal economy. So.
I'm not a great believer in cryptocurrencies, I have to admit. And I mean, to also mention a couple of cryptocurrency volatility examples. I mean, all it took is a couple of, you know, exchanges to be wiped out through structural weaknesses for the cryptocurrencies, also to show just how volatile and vulnerable they themselves are. But the underlying technology of cryptocurrencies, blockchain or Ethereum and a couple of other initiatives, and how they are coming to the market to create quite disruptive technologies and solutions to very mundane processes and very costly processes that the banks have. I think that is going to be very, very significant in the future. And we've seen, there's a couple of examples already where the blockchain technology is coming mainstream. I mean, from what I've read, Australian regulatory bodies are actually working with blockchain technology companies already to implement blockchain at the regulatory level in Australia. Now, that kind of forward thinking, that is something that we should actually be looking to, aspiring to emulate in Cyprus as well, because the regulatory piece or the regulatory strengths of Cyprus, I mean, we've heard it throughout the day. We keep touting that as one of our great incentives to relocate here. So that's what we should be looking to do in the future and going forward on creating a successful financial services center here. Bit off topic with Ace, but I thought
no, that was
it's
very
related
insightful.
to.
Thank you. Paulo, would you like to add something to that?
I share Michalis' skepticism with the cryptocurrencies. I think the value of a cryptocurrency is its scarcity. It's the fact that you cannot create as much as it as you want. This brings also a fantastic political dimension to the problem, meaning very difficult.
So the panel has divided the cryptocurrency skeptics and the proponents. So if I may sum everything up before we move to questions, is that the banks actually can get back on track when it comes to the areas they've missed out. They would be looking to buy the technology from fintech done, reinventing the wheel. And those areas that are underserved is nothing new. It's just the models that the banks have had before and the fintech startups are targeting now. The improvement of that, the evolution of that. Thank you very much. Now I'm going to move to questions, if we have any questions from the audience. Yes, George? Sorry, I'm holding both mics. Here you go.
Working. Hi, and thank you for all the information you have gave us. I have several times during the last 2 years reading articles about cashless world that is coming, and I think it already came. But I constantly found articles about the Scandinavian countries expressing worries about if we are really ready to accept this new trend, the cashless world, if we are ready to be protected by all the hackers. There are already examples of the court cases with the bitcoins, and how they wouldn't be able to make a decision in court to get the results of that guy that was actually selling drugs from the internet and getting paid through bitcoins. So what I'm trying to ask you, if you believe that there is progress to our world to be ready to accept this cashless prototype that is coming, and all the consequences, we are ready to accept that financially and technology-wise. You have anything to answer to that?
First of all, let me just make a distinction here between cashless society, which is essentially where the Nordic societies are really
I'm just
leading
stating
the
that
way.
in order to manage to be cashless, they have to find ways of new technology to kick in, and they
It doesn't really have to do anything with new currencies, though. You can very well achieve being a cashless society using technology and using the education of the consumers to achieve that without resorting to, other means. You can use your existing currency and replace your physical currency with digital currency, use it without resorting to, non-fiat currencies. And the Nordics have been really good at it. I mean, I have, from personal experience, been going to the Nordics for many years, and I was telling friends I have never, ever, ever seeing what the Swedish currency looks like, because I never had to. I always use cashless transactions there.
They are the ones stated that they are worried about if we are ready to go 100%.
They are, I mean, I think Sweden, for example, is at 65% cashless already. And in fact, very recently, just in the last couple of weeks, the Central Bank of Sweden has already launched a project on reviewing on how to actually take the country to 100% and introduce more ways and means for the society and for consumers to transact based on the krona, using an e-krona essentially, in order to convert practically all transactions, consumer to consumer, business to consumer, business to business, convert them all to cashless transactions, even conserving the anonymity, which is one of the things that a lot of people are concerned about. You know, when you turn everything into electronic, it's all about tracking people and you know, knowing every little thing about their life because it's all now big data. And people are actually looking at this quite extensively to see how they can find this middle ground that preserves anonymity but changes things to cashless so that you can actually make this more efficient and more useful and generate financial activity as well.
Thank you.
Look, but I think it's accepting something like that is very much down to culture. You know, I mean, in Sweden they say. I mean, they shifted from driving on one side to the other side of the road in one day or over the weekend. And I think, you know, it's all about culture in being able to accept this, and because, you know, I mean, there is also, you know, the recognition that, you know, certain countries and you know, we have some of that in Cyprus, obviously. I mean, they operate very much on a cash basis because that's the way, you know, certain other objectives are achieved. And I think, you know, we have to be cognizant of that. There is drivers which are, you know, rudely sort of embedded in the day-to-day life of people in Cyprus, which will, in my opinion, delay any sort of real transformation into a cashless sort of basis. So.
Basically, what make me ask you the question was that because those countries make the first step, as most of the times they may do the first steps, but they are the one got out and said we are a bit worried that we are not ready as a country to have 100% cashless model. I think it was the Sweden finance minister that made that question and publicly announced that, like, we are a bit going to slow down the project going 100%. As the article you might have read something similar or the same article. It's like they have some frustrations, some worries that maybe we are not ready to protect the whole system, and maybe with hackers or any other worries that they may have in their mind. And that was the question. Basically, if you think we have enough securities and enough developed enough model to accept this cashless model. That was the question. And
I think if you think about it, as Michalis said, that cashless society is basically a digital society, digital currency. And we're already doing that. I think we do have the security in place. I think it's more of a culture thing rather than a technology limitation.
Okay. Thank you.
Because we only have 4 minutes left, let's move on to the next question. And you gentlemen can resume afterwards. Do we have any other questions from the audience? You've been quite informative, I believe, covered the cashless side as well. Gentlemen, do you have any additions, anything else you would like to add to the panel before we wrap up? Okay, well, it's been great. Thank you for joining us today. And this concludes the session of Room A for the Insights Day 1. We will see you all tomorrow morning resuming. Thank you very much.